U.S. drilling activity moved slightly higher this week. The latest Baker Hughes data shows the United States adding 7 rigs overall. Oklahoma alone added 2 rigs, signaling continued operator confidence in key onshore basins. Incremental rig gains often point to steady capital deployment rather than aggressive expansion. Operators appear to be prioritizing disciplined production growth while watching price signals. Investor attention is also shifting toward better real-time market data. Bass EXP introduced a new online investor tool tracking U.S. and Oklahoma rig counts alongside live oil and gas prices. The platform is part of a broader rollout of data tools designed to give investors clearer visibility into upstream activity. Meanwhile, global gas markets are tightening rapidly. LNG shipping rates surged dramatically this week. Spot charter rates for modern LNG carriers jumped from roughly $40,000 per day to nearly $300,000. Traders are scrambling to secure vessels as Middle East supply disruptions threaten global LNG flows. The spike reflects both a shortage of available ships and the expectation of longer shipping routes. Cargoes that would normally move short distances from the Gulf may now travel from the United States or Australia. That change dramatically increases voyage time and vessel demand. Asian LNG prices briefly surged above $25 per MMBTU before easing slightly. Tensions in the Middle East are also affecting oil transportation. An oil tanker anchored near Kuwait reported a large explosion and a cargo tank leak. Authorities say a small craft left the area shortly after the blast. The vessel took on water, but no fires were reported, and the crew remained safe. The incident comes as tanker traffic through the Strait of Hormuz has slowed dramatically. Security concerns have caused many vessels to remain anchored rather than transit the route. Roughly 20% of the world's oil supply normally moves through this corridor. The United States has indicated it may provide naval escorts and political risk guarantees for tankers. If energy shipping disruptions persist, how long before global supply chains begin to reprice risk across both oil and LNG markets? In your industry tidbit, the Strait of Hormuz is only about 21 miles wide at its narrowest point, yet it handles roughly 1 out of every 5 barrels of oil traded globally. At Bass EXP, we don't just follow the news, we put it to work. Learn more about direct participation in oil and gas at bassexp.com.